Hello everyone and welcome to a new Elliott Wave Forecast video blog. In today's video we'll be taking a look at an artificial intelligence stock. It's been trading in the New York Stock Exchange since 2020. The company name is C3.ai and we'll be looking at the technical structure taking place since the IPO all the way to the current price action taking place. So as we can notice here, the market has been establishing a move to the downside or a bearish trend since the peak in December 2020. I mean, the stock didn't enjoy too much the rally. It rallied only for 3 weeks. I mean, the 3 weeks was enough to double in price. I mean, started around the $90 mark all the way toward 180. So it was a decent rally for a short period of time before the market turned it lower for 2 years. I mean, it's been trading to the downside for 2 years. We can see the structure here showing a zigzag structure. The zigzag structure is, unfolds as a 5-wave move lower, 3-wave bounce, then another 5-wave move to the downside. So we can see the entire move is in 3 swings. And this is really important because we know in Elliott Wave forecast and based on the Elliott Wave theory that after a 3 waves decline ends, there is always 2 scenarios that is possible to happen. Either the market will be looking to resume the trend. I mean, in this case, we don't have a major trend because the stock doesn't have history, but it only rallied for 3 waves. So ideally, if we didn't have any other indication, if the trend was to the upside from the lows and you had 3 waves pullback, then usually when that 3 waves pullback in the zigzag structure ends, the market resumes the rally. So it should be looking for new highs to take the 2020 peak, which was around the 183 area, or at least we should be expecting a 3-wave bounce to correct the decline that took place. So if we apply this for our stock today, we notice that the recent rally here, which we'll be talking about in the short term and define the structure, the recent rally was a strong impulsive move, and based on other characteristic of this move, we established that this move to the upside is no longer part of this correction. We know that this cycle that took place since December 2020 has ended, and consequently we are looking for this move to be part either of a new cycle to the upside or at least for a larger 3-wave bounce that should be correcting the decline that we saw from the previous peak. So based on these information and based off, of course, at other indicators that we are using that gave us the hints that the cycle has ended, including, for example, the pivot in around this 2021 peak, which gave up. We have the impulsive rally taking place. We have the correlation with the rest of the market that is establishing a rally from December 2022 lows. So all these information is giving us that the rally from here is different from the decline. And of course, we can notice that it's already starting to show a higher high sequence in terms of structure, because the recent high we saw back in August of 2022. So we're already above that high. So we already have a higher high sequence here. And the market is now looking to establish a higher low sequence, because the recent decline we saw a lower low, which is the final move in the wave 5. Now the market should be looking, if it's going to confirm that we are establishing a new trend to the upside or at least a wave bounce, we should be looking for a higher high and a higher low. So the higher low in the wave 2, which is going to happen at this stage, is based on the short-term structure, which we can see here in the 4-hour chart. Of course, it all started from the rally that happened from the 28th of December 2022. The rally was a strong one, around 200% move. That's a strong rally from $10 towards 30. I mean, an impressive rally like this, specifically with impulsive structure inside the move, confirming that this is not part of the correction. This is not a 5-wave move that should be usually seen within a corrective structure. There is only one scenario that this 5-wave move is part of the corrective structure, if the stock being doing a flat correction. I mean, a flat correction usually is tricky and gives you false breakout of the trend or false breakout of the previous cycle, which could be this case that we are doing a wave 4 in terms of a flat structure from here. This could be A, B, and C, and this 5-wave move means that we are going to still to see another low. But we have other metrics that we are looking for. This scenario is still on the table, which we are giving a low percentage until we have more data, because if we had a flat structure, then we should be looking for an impulsive decline taking place, which is at this stage with the current data isn't supported. We noticed that after the rally took place, a 5-wave move to the upside that ended around the 6th of February, early the last month, around the 30 area. We noticed that a 3 waves decline took place. The 3 waves found the initial buyers at the equal X area exactly around the 20 mark, which is also the 50% of the rally. So it was a strong support with both equal X and 50%. And we can see after a 3-wave bounce, after a 3 waves zigzag structure to the downside, we saw a strong rally. So that's the first indication that we are seeing a reaction after 3 waves, because usually the market corrects in 3, 7, 11 swings. We always would like to see the market correcting in this type of structure, because this is really important to define the type of correction that you have. And when the market corrects in 3, 7, or 11 swings, you know that the move is taking place, is corrective. And when a corrective structure takes place after a rally, you know that when the correction ends, you should be resuming the same trend that you established earlier. So in this case, we saw a 3-wave move to the downside, strong bounce. Then today, the stock did manage to take this previous low around the $20 mark, 20.7, which happened around the 14th of February. So the stock did manage to make a new marginal low today, which confirmed that the correction isn't done, because after the 3 waves, you could be calling the wave 2 in place, and we could be resuming the rally. Unfortunately, of course, the stock remained within a sideways range. You can see here, it managed to hold the trend line, sideways range, and today it's breaking to the downside. Of course, breaking to the downside doesn't mean, we should be just going all the way toward this market blue box around 16-13. Of course, the structure can always change in the short term. The structure can also truncate around the 618 area. Sometimes this type of truncation happen, but we are not calling for any truncation. I'm just pointing out to the fact that the moment you had managed to make a new marginal low, the market is currently showing 5 swing to the downside. It's an incomplete bear sequence from this peak, and it's suggesting that we should be still seeing further move lower to finish to finish a 7 swing move to the downside. We had 3, and now we are going to finish 7. 1, 2, 3, 4, 5, 6, and 7 move to the downside, which ideally could take you toward the equal X area around the 16.17, 13.67. If the stock managed to reach that area, that could present a good buying investment opportunity, because you have a clear invalidation level, which is your December low around the 10.16 area. So a small stop loss, just around $5 move. Of course, in terms of potential, that could be huge. So you need to always manage your risk accordingly. Everyone could establish a position, but without the good risk management and without managing your portfolio on the right way, you could always blow up your account. So we don't recommend to go all in. We don't recommend to use high risk here. Always make a plan about this type of structure, and then wait for the market to give you the opportunity. Don't try to chase it here. If the market managed to trade lower and give you this last leg to the downside to finish this corrective double 3 structure, WXY to the downside, then you should be looking for this area to present at least, if not a new rally to the upside, it will give you at least another bounce similar to this one, which will allow you, of course, to protect your position. You can be looking for the market to create separation. Then you can be making other choices about your position. So if we establish a major low here, which could be your wave 2, or could be only your wave B, because nothing guaranteeing that this rally will be turning into an impulse of 5-wave move. This could be just a 3-wave bounce, A, B, C, then the market again remain either sideways or making new lows. So if the market later on managed to establish an impulsive 5-wave move to the upside, ideally it will be retesting the 38% 618 area, which is between 76 all the way higher toward 117. And as you can see, that could be really a tasty risk reward that you should be looking for a daily reversal with a weekly trend to the upside. That could be taking place if you manage to take a long around the 16 levels. Then that's really a good move to the upside for the rest of the year. After that, the stock again will have a decision time. If we have a 5-wave move, we'll be getting another option to buy. After the 5-wave move, there will be a daily pullback. Again, 3-wave pullback. You establish a potential buying area, then the stock should be rallying again. Nothing guaranteed that you will be making your all-time highs in the coming maybe few years. The market could establish more data. With more data, we can know that if this is turning into another 5-wave up, then the pullback should hold the lows and then new rally, or the move could be just an ABC. This could be just your A, you get a B and a C, then the stock again trade to the downside. So it's too early to decide whether the market will be breaking to the 2020 peak, but everything starts by the first step, which is the initial wave 1 as an impulsive rally. And after we build the corrective move in wave 2, we could be looking for an impulsive rally for the rest of the year, which is really important because that could be an investment opportunity in the midterm. And keep in mind that we are just getting out of this basically range that we've been seeing in the recent we can say a few months, 6 months, all the way. I mean, this is started already since 2022, so almost a year in this range. So we are getting out of this range after we managed to break above the recent peak that we saw in February, and that would be finally starting maybe a new trend to the upside. I hope the idea is clear. Remember, these structures are always sticky in the short term. We are not suggesting that you should be looking to trade it to the downside or looking to just buy every move lower or every move to the upside, but looking at the trend 2 years to the downside, at least a larger 3-wave bounce to correct the cycle is on the horizon for the stock. And adding to that, the hype that we are seeing recently in the recent few months about the artificial intelligence and all the hype we are seeing around the market for this type of instrument. So this could help the stock to establish a good case in the coming few months. I hope the idea is clear. If you are looking for this type of investment, this type of ideas and structure for stocks or ETFs, you can always check at Elliott Wave Forecast. We have a service providing forecast for 78 instruments, and we have many stocks and ETFs that you can be looking to check and find good trading opportunities and good investment opportunities. Take care and see you on the next video.